All right, good morning. Welcome back here to Trader Money. Great to have you aboard. I titled this video a different kind of rally because that's what we're going to go look at. We're going to take a look at this rally and see, okay, is there anything different about this rally from other rallies that we have seen? For instance, we saw a 40-point rally here on Monday. Right? I mean, it happened in 40 minutes. We saw a 40-point rally. So, seeing a big rally isn't all that unusual. But most of these rallies have been sold into aggressively. You hear me oftentimes will say, the biggest rallies happen in bear markets. They don't happen in bull markets. The bull markets, they're the ones where you turn around and 3 months later, the market's up 5% and you wonder how did it get up, right? Because there was never really any real big day. In bear markets, we get huge rallies. And this morning, we're looking at about a 60-point rally off of the lows. Now, market opened up, shot up, and then, started its normal. Here we go down. Let's sell everything. And started to drop. But as it was dropping, it was a little bit different than what we had seen, in the past. This was not a drop that was being heavily led by some of the leading sectors. So if you take a look at the XLI, right, this isn't, industrials didn't exactly have that same action. It was a slow bleed down here this morning, and then they've been really kind of picking on up here. Transports, right? Transports, a little bit different action here in them. And I mentioned this morning, transports are what I want to see outperform to say, look, this rally's a little bit different. And here we are with transports this morning. They never dipped into the red. Even though the market, had that really strong, drag lower. Transports never dipped into the red here. And so very different type of rally pullback dynamic. Utilities, they did dip into the red. They hit new lows on the sell. Utilities, right? The other safety sector, consumer staples, they hit new lows this morning as the market sold off. So it was some of the safety groups that hit the new lows. It wasn't it wasn't things like tech. Tech didn't go down, hit new low. We didn't see consumer discretionary hit a new low. In fact, that stayed green. We didn't see energy hit a new low, though it came close. But energy has had an absolute rip your face off rally here today. This is one, it was at 53.40. It's now at 55.40. That's about 4% move here in the XLE. Just a monster move. Oil is up about $3, snapping back to about 45, and you can see this monster move here on it, with oil. Now, I say monster move, but, if we put this back into the context of a 1-hour chart, this is what it looks like. Right, so we're not exactly talking about something that is even getting back to Sunday night highs, right? And when we look at the overall market and we zoom out a little bit and we look at this rally, here were Sunday night futures highs. We're not even close to them. We're still 30 points away from them, right? So it is one where, yes, this has been a big rally this morning. But it's also, it's also not even putting most things into the green for the week here so far. Now, I'd argue it's a different rally. I'd argue this is a very different rally out there, and one that is potentially game-changing. We've talked about the bottoming volumes that would come in. One thing we know is if they get broken, they get revisited, they get retested. But when you look at the leadership here today, when you look at the sectoral breakdown today, this is one of the first rallies that we have seen where it has been a bullish sectoral breakdown and a strongly bullish sectoral breakdown. It's not just, skewed a little bit for the bulls. It is strongly in the bulls' favor, from financials to technology to consumer discretionary to industrials and transports leading the way. And, the bulls have not seen those sectors lead the way in a long, long time. What's also interesting is this is not a global reflation type of move here. This is very U.S. oriented. You look at the FXI, which has outperformed overall, here over the last month at least. It's not exactly outperforming today. Emerging markets, same thing, not exactly outperforming. So this is not something where, where we go and we say, hey, the most recent outperformers are really doing well. This is something where it's the big laggards that are seeing reflation into them here today, specifically tech, industrials, and those sectors that we've mentioned. Now, you know me, one of the things we haven't seen, we haven't seen this on the IYT on transports in the whole month of December. We have not seen a single day where transports close above the high from the prior day. And for me, that's what I want to see. I went out and looked at option values for this move and thought, do I go buy something for the challenge, on this move and everything? And the reality is option values haven't come down very much. They're starting to come down a little bit. Here's the VXX. You can see after pushing above 50 this morning, starting to come on down a little bit here, starting to reverse a little bit. And we're seeing, Bank of America options, starting to compress a little bit and whatnot. But one of the things they're still expensive. They're still very expensive. But one of the things that I want to see is that stocks are going to close or look to at least close above their highs from Monday. And there's some areas where, that's probably pretty easy to say they're going to do it. We can go look at something or some of these tech names. Maybe. Looks like stock chart's having some issues here. But we can come look at some of the tech names, and they are, they are having, those type of days where, they are looking like they'll close above the high from the prior day. But that's not en masse out there, right? You look at Micron, it's not going to do it. You look at Ford or KV Homes or something like that, AT&T. So, that's what I want to see. I want to see if that the market's going to do that. I do think we are in a situation on the market where the upside is incredibly high relative to what it has been. Even to expect, a move here on the market back to 2,700 on a rebound rally, I don't think is out of the realm of possibility. I don't think it's something where we go, wow, that would just be insane. And ultimately, I would be surprised if these lows back here from November do not get retested. And so, okay, today's first type of day of rally. If we go and we look at when bottoms are put in, and we go look at other rallies where bottoms are put in, it's a day like today where a bottom is put in, where, okay, some positive signs, and then it just kind of bleeds and shakes around for another week or two. That is a common type of action to see. What happens to option values during that time? You got it. They get clobbered. So, if you want the odds much more in your favor, you're looking for things bouncing off of higher lows rather than off of lower lows. And right now, everything's off of lower lows. But overall, it's an encouraging day for the bulls. But I think it's one of those days where all you can really count it as is a snapback, bounce back so far. It's not something where you can say, hey, you know what, mortgage the house, go all in, we're going straight up from here. But I do think it's one where you can use stops below today's lows as decent areas. Now they're 50 points away. It's incredibly far away, so it's not, from an option standpoint, short-term option standpoint, I don't know that it matters all that much to use those levels. But it's one where we are seeing a change in the wind, taking place out there. Thanks for hopping on. I'll jump on here before the close today. That's when I'll be looking to make a decision, and we'll go from there. Talk to you then. Take care.